But we look at what the strong results is, why this rally, and look at the bull as well as the bear case for M&M. Now, if we start with the bull case, the first one is, of course, has to be the strong product portfolio as well as the launch that the company has spoken about. 16 new launches by the company over the next 6 years till FY30 till 2030. EVs included in this of 6 to 7 new born EVs, as well as a strong booking number which the company already has of roughly 220,000, which excludes the additional 50,000 for the brand new launch of 3XO. But I feel like Harsh has something to say about it.
Oh, absolutely, Puneet. So there could be delays here because the production ramp up from sub 50,000 to 64,000 is no mean feat in a year. And thereafter to take it to 72, any delay here could actually be a negative on the counter because it's pricing in a lot of these positives, which you've just spoken about. The other piece is in case the launches get delayed as well. You have plenty of launches lined up over the next few years, including the new Thar, which I'm really looking forward to. But any delay there could be a negative.
Well, certainly, when we look at the second case of what could have led this particular rally, we look at the strong operating leverage as well as the margins the company has maintained in this particular financial year, coming in at, for this particular quarter, it's coming at 13.5%. Ms. Anisha has said that this will continue to stay strong for the company as they are looking forward to the next financial year as well. And they have also said that, the debt level is right under control of them, just above 1,000 crores right now. It's down from the peak levels of roughly 6,000 crores over the last 3 to 4 financial years before. So really strong on the operating leverage as well as the margin side.
I take your point there, but what I still feel is it leaves M&M a window in terms of an opening on the downside with regard to margins where commodity costs are concerned. Because that could dent margins and therefore throw some of these otherwise logical arguments out of the window.
Well, it could make a case for the commodities, or not so friendly for the automobiles. When you look at the third bull case of what could have led to the particular rally, we see that M&M becoming not now replacing Tata Motors as the proxy SUV play. They have launches here. They already have 5 SUVs currently, if you include the Bolero as well as the Thar, as Harsh rightly said. And it could be a key positive here. Do know that Ms. Anisha has said today that they will only be in the particular SUV space. They are not looking to enter any smaller car segments or so. And the 16 launches, if they're promised in this particular segment, will be across price ranges, surely catering to a larger audience as well. And that could bring in new buyers. Do note for the 3XO, they have already said that roughly just 15% of the existing M&M buyers are the current ones who have booked for the 3XO as well.
On this count, I really want to contest because you have the new EV policy coming in. With the Teslas, the BYDs of the world coming in, definite competition for someone like M&M in the premium space. So that's my first point. The second point is absolutely any loss of market share here could be a dent with regard to sentiment as well as numbers for M&M. And therefore, the sense is that you're pricing in the positives, but there likely could be some negatives with regard to competition and maybe some lower domestic growth.
Well, if you look at the last two ones, what could have led to this particular rally as well? Well, the units are, of course, expected to perform better going forward as well. When we look at, the other two conglomerates, it is a conglomerate, so we saw the other Tech Mahindra hasn't done well anything in the past 2 years, but they have had a CEO change. And Anisha has said that over the next 2 to 3 years, we could see a turnaround in this business. MMFSL, the financial services entity, has been under the radar for not the right reasons as well. There was a fraud reported earlier as well, but the company has said that that was only a one-time thing and they are looking forward as well as moving forward on that basis as well.
I'd call that a distraction, Puneet, because you're a focused auto player versus you're a conglomerate. There's definitely some amount of distraction when it comes to management bandwidth. And therefore, the diversified conglomerate structure only increases the risk, if not, it doesn't reduce it in any way.
That's right. And finally, the last one, what could have led to it? Investments of roughly 27,000 crores lined up over the next 3 fiscals, the highest ever, the first time ever the company is giving it a guidance of 27,000 crores. This is only the auto one. On an overall basis, it is higher at 37,000 crores. Of course, they are saying that the current operating leverage as well as the cash flow that the company is generating will aid for further capex as well. But currently, it's a big amount. Do know that in the company's history as well.
Valuations are not cheap, Puneet. So despite all of this clawback of cash flow, you're seeing valuations on a standalone automobile basis at 18 to 20 times EV EBITDA forward, which is quite expensive. Given past M&M, definitely expensive. But even if you don't benchmark it to the past, it's quite expensive. And most of your maybe 80 to 90% of your valuation comes from that. So therefore, please be mindful before you look at.